Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, August 7th, and again, this is kind of a slow week this week, but we got like one economic news release, not a huge impactful one, but most of our stuff this week will be again on the technicals. So basically, this week or today, we got the job openings for June numbers. We had about 3.7 million for May, and then in June it jumped up. So that means a little bit more opportunities. They're starting to hire a little bit more, as we've kind of seen on the new jobs creation like this last week, which was for July. So a little bit more improvement in the jobs. So that's probably why consumer confidence is getting a little bit better, because the jobs are getting a little bit better, as we'll see. And of course, consumer confidence is higher. People are out buying more homes as they're feeling a little bit better where things are at for them. So let's go ahead and jump over to the headline news here today. Jump over here, and right now the stock market's up right now. Some of its earnings a little bit that's coming out, and we had a couple comments here made by a couple Fed presidents. The Boston Fed president, Rosengren, basically was saying that he's for more asset purchases. And then you got the other spectrum, the Dallas Fed president, Fisher, who is completely against it. So we got two different scenarios, or two different presidents, and both members here are both Fed presidents are not voting members this year, so they're not actually on the board that make these decisions. They're just voicing their opinions at certain events that they're speaking at, engagements. So now we're going to take a look at the bond market and see what the interest rates are doing today. And we got a huge opening gap going downwards again. So as we saw yesterday, we're touched basically right off the 10-day moving average. We still have this opening gap we haven't completely closed yet, and it did pull back, and then we have a little momentum going the opposite direction. So I do anticipate maybe this pulling back a little bit, this gap closing, and this gap will need to be closed. I do think this will happen probably, within a couple of weeks here. May not happen immediately, but last time we were down this level was about middle of June or July rather. We were down at this level around the July 10th, 12th range, and we kind of steadily climbed back upwards. So I do think we could steadily climb upwards again, at least close these gaps. I don't know if we'll go up here again, but at least close these gaps, and before it makes a final decision going upwards or downwards. So right now rates have went up a little bit, as we can see from the bond market. So when the bond market's down, so there's less demand, so the bond market's downwards, that means rates go up. And when these go upwards, that means rates come downwards. So that's the opposite effect. And what that primarily means is that there's a lot of demand to buy these bonds here, this debt here, and that helps improve the interest rates. So interest rates improve. So if there's less demand for it, like some of this money we compete with the stock market goes into the stock market, that means there's less money in the bond market and higher interest rates. All right, folks, you guys have a wonderful day. Thanks for stopping by and watching, and I will see you guys tomorrow. And again, if you guys like these reports, stop by Mike's Daily Market Report. Subscribe. This is the only thing you'll receive once you subscribe on there from me. I don't sell your information or anything. We just when I post it, you automatically get an update sent to you every morning. All right, have a wonderful day, and again, see you tomorrow.